Friday, June 5th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at a few things today. They might seem not related, but I think they're very much related. The first one is a guy who's JP Morgan's head. He's a chairman of the Market and Investment Strategy Group at JP Morgan. He's warning of an impending U.S. Treasury market bust. He sees it probably happening in the next few years, maybe around 2030 or thereafter. And then we're going to look at Robert Kagan, who's the one of the main people behind the Project for a New American Century that was written back in the 90s. And he's a top neocon. He's the husband of Victoria Nuland, who's also a neocon. And he's admitting that the 80 years of control that America had on the world's waterways, that's finished with the war in Iran. He's actually admitting that America has lost the war in Iran. You might not agree with him, but I think you need to listen to a guy who probably was cheering for this war to be successful, because he's the author for the Project for the New American Century, and he's basically saying this is over now, and I think that's very serious. And how it's related to the JP Morgan guy is that it's going to accelerate, I think, the problem for U.S. Treasuries. And then we're going to look at another topic that's also related, and that's the topic of Kevin Warsh, the new Fed chairman. His top policy advisor, he's got a very interesting background, and I think all roads lead to gold and silver in this environment. First, the JP Morgan guy, what he's saying, what Robert Kagan has said, and this new key policy advisor, we're going to look at what he thinks. Before I do, just wanted to talk a little bit about the markets and gold. Yes, I see a lot of frustration in the comment section about gold and silver, what they're doing. And yeah, I can understand that. And I've been through it for over 20 years. And just a little bit of a background here. I'm in the UK, and I remember buying my first gold coins back in 2002. And at the time, the price was around £225 per troy ounce. And up until 2004 or 5 or even 6, the pound was relatively strong against the dollar. And even though gold was going up in dollars, it was very frustrating. It kind of stayed still in pounds. And I remember that very well. But yeah, it's frustrating because a lot of times we know what's going on, and we expect the markets to react to the way we think. But what I'm trying to say here is that you need to be patient unless you think things have changed 180 degrees, that you can now trust governments, that you can trust central banks, that all wars are going to end, and that they're going to stop printing money, governments are going to rein in spending. Unless you think that's going to happen, I would stick with gold and silver because, as I've said many times, all fiat currencies are sinking, and they're going to continue to sink. And I warned about that back in 2006 and 7, and I'm warning 20 years later that they're going to continue to do so, and they're probably going to accelerate now, because the dollar is at the heart of the fiat currency system, and I'm not saying the dollar is going to disappear. Anyway, there's a link here in the cards to a playlist that I have. All fiat currencies are sinking if you want to look into it. Let's start with the JP Morgan guy, and I'm going to put a link as well to an interview he did on April 16th this year on a channel called Behind the Balance Sheet. I'll put it here. It says JP Morgan's Michael Sembalest on the impending Treasury bust. So yeah, he chairs the Market and Investment Strategy Group at JP Morgan Asset and Wealth Management, and effectively oversees $4 trillion under management. So I recommend you listening to the interview. It's 46 minutes long, but I think it's really interesting to see that. He says that, and I've got a chart here for you guys. Where is it? Yeah. So he talks about entitlement spending, mandatory outlays, and net interest payments versus revenues. So he's saying that in the next few years, net interest and entitlements and mandatory outlays, that's going to be more than the U.S. takes in tax revenues. So there's going to be a problem. And he sees the Treasury problem, Treasury market problem by 2030 or from 2030. His Treasury bust, he defines it as a rise of 150 to 200 basis points in 1 year, which is huge. It's like going from the present level, let's say in the 30-year, from 5% to 6.5 or 7 in 1 year. And of course, the 10-year from like 4.5 to like 5.5 or 6 or even more. And I'm not surprised because I've showed you charts of the yields, long-term charts, and technically it looks like they could go that way. And the interesting thing is he says that there's two ways to solve this problem when it rears its ugly head in the next few years. And the first one is that Congress and whatever administration is in power and the central bank, they decide to rein in spending. They decide to, clean house, rein in spending, increase taxes. And I personally don't see that as very realistic. The other one, the other option, of course, is, he says, for the Federal Reserve to monetize the debt, i.e. to print money. And I think that's what we're going to see. So this is a guy who is the strategist, the analyst for $4 trillion under management at JP Morgan Wealth and Asset Management. I think this is very, very telling. And what's that got to do with Robert Kagan? Well, there's an interview he did 1 day ago with Amanpour and Company, and it's entitled, "Has the U.S. Already Lost the War in Iran?" I'm going to put a link here, and I'm not trying to bash Trump. I'm just trying to look at things so that you and I, even here in the UK, everywhere around the world, can protect ourselves financially, because this is going to be huge. The world is breaking apart. There's the old saying back in the 19th century and early 20th century that Britannia ruled the waves. Well, Robert Kagan is basically saying that the United States doesn't rule the waves anymore, because he doesn't see Iran giving up or losing control of the Strait of Hormuz. The other thing he says that I think is really significant in terms of the dollar, not just because America can't afford to control the world's waterways because it's failed in in the Strait of Hormuz, but also because he notes that a lot of the Gulf cooperation countries, Saudi Arabia, UAE, Kuwait, Bahrain, Qatar, they're going to turn towards Iran, and they're going to make deals with Iran, not with the U.S. So I think in terms of the petrodollar, that's huge. And the fact that America couldn't even defeat like a country that isn't a major power, like Iran, is very significant. And so what it means, yes, America might be able to control the waterways in its backyard, like in Venezuela and Latin America, and even then, I doubt it. So, yeah, if you can't control the waterways, you're not really, well, you're not really the global empire anymore, just like Britain didn't control the waterways after World War II, because it lost that title of empire. And of course, there was the Suez Crisis in 1956 that really was the last nail in the coffin of the British Empire. And I think this Iran war could be, well, could be the United States Suez Crisis. And he goes on to say as well that Israel is a big loser in this whole story. And the reason why I think this is significant is because, I don't know if you remember or if you've heard of it. General Wesley Clark, he was in charge of Allied NATO forces in Serbia, I think in the 90s. And he did an interview with, I think it was Democracy Now! Years ago, just after 9/11. And he said he was coming back to the Pentagon, and he went to see a general or someone, a friend, and they were talking, and he said, well, we're now going after these countries, 7 countries. He said the countries, and Iran was one of them. Iran was the last one standing. And this is all part of this project for a new American century. So Robert Kagan, I think, is being realistic. I'm sure he would have wanted the U.S. to have changed the regime in Tehran, like right away, but he's admitting it's all over. And I think this is really serious because it's going to accelerate de-treasurization or de-dollarization. And when the world becomes multipolar, like it's going to become, and I think the United States is still going to be a major power, but it's not going to be the major power. It's going to be the U.S., China, Russia. The EU needs to sharpen up because I don't see it being a major power right now. So I won't add the EU, but it could, Europe. There's still a lot of good things about Europe. We just need to change our attitude. But so what I'm trying to say, in such a world, countries are going to have to compete in terms of their currency. And the only way to maintain a credible currency is to have a reserve asset that's neutral, actually, like gold and even silver. And that's why since 2022, all the major countries outside the West have been accumulating physical gold hand over fist, and they're continuing to do so this year. And this is where we come to Kevin Warsh's new top policy advisor. I have to thank Eric Young. He posted this, actually it was yesterday. And he says, who is Paul Winfrey, Kevin Warsh's key policy advisor. And it goes on to say Paul Winfrey is a top conservative economist serving as a key policy advisor to new Fed Chairman Kevin Warsh. He's president and CEO of the Economic Policy Innovation Center, or EPIC, a former Trump White House Deputy Assistant for Domestic Policy and an ex-Heritage Foundation scholar. In Project 2025's Mandate for Leadership, Winfrey wrote the Federal Reserve chapter. He seriously explored returning to or running parallel with a gold standard to fight inflation and boom-bust cycles. He highlights gold convertible treasury instruments, aka gold bonds, as a practical transitional tool with the dollar redeemable at market gold prices. So I think the American administration, the Trump administration, they are aware of all this development that's going on, that we're going to have a treasury bust, that we're probably going to have to see a gold revaluation to help the fiscal situation. That could be one way to do it. It's probably a third way that Michael Sembalest from JP Morgan did not touch upon. He didn't touch upon gold. So as I said, you need to be patient. And overall, though, I think what this means for the world, what it means for us, the man and woman on the street, is continued rise in the cost of living. Yeah, because when fiat currencies go the way of the dodo bird, when they finally implode, like I think we're going to see, and it's not just the dollar, of course. Yeah, that's what happens. The cost of living goes up. And I think the stock market, what about the stock market and all these IPOs that are coming out, like SpaceX? Yeah, it just looks like things want to continue to melt up. But I wouldn't be surprised if we could see a big correction as well in the stock market. But I'm sticking longer term to gold and silver, to the miners. And yes, they have been frustrating, but I think that's where the value is. And I just wanted to say that today we have the jobs data. That's something to look at for the markets, the non-farm payroll. And with that, I'm going to wish you all a very good day and a great weekend. Take care. Bye.